For the fourth straight month, foreign investors reduced investments in the assets of the Russian Federation. During this time, they brought the Russian stock more than $1.6 billion, the maximum outflow for the last 3.5 years. The flight of investors is due to unfulfilled expectations regarding the rapprochement between the United States and Russia, the aggravation of the corporate conflict between Rosneft and AFK Sistema, and the fall in oil prices. Data Emerging Portfolio Fund Research, EPFR, show that foreign investors continue to reduce investment in funds oriented to the Russian stock market. According to Kommersant, based on data from Renaissance Capital, the amount of funds withdrawn from such funds in the week ending June 28 exceeded $83 million. Almost continuous outflow of foreign investments from the Russian market proceeds from the end of February. In general, over the 4 months it exceeded $1.6 billion. Outflows from Russian funds occurs on the background of their inflow to the assets of other developing countries. According to EPFR, last week funds emerging markets attracted almost $1.9 billion, and in 4 months, almost $28 billion in the Russian stock market was among the outsiders. More funds were derived only from China, $4 billion. But the size of this market significantly more Russian. Leaders in attracting funds from the BRIC countries were India and Brazil. Funds have 4 months invested $2.6 billion and $1 billion respectively. The recovery in oil prices had no impact on the Russian currency. More resources of Russian funds lost only 3.5 years ago. Investors then were concerned about the actions of the Federal Reserve scaling back monetary stimulus and low-growth economies of developing countries, including Russian. Since August 2013, for the 7 months of almost continuous flight of investors, Russian funds lost $2.47 billion, and all funds focused on emerging markets, has lost more than $44 billion. The current negative investor perception of the Russian market contribute primarily internal risks, which led to the deterioration of the investment climate in the country. In the first place, unjustified expectations about the rapprochement between Washington and Moscow after the election of a new president of the United States. In June, the U.S. Senate has prepared a bill to expand anti-Russian sanctions. On Wednesday, the EU Council also extended sectoral sanctions against Russia. On Friday, Moscow has taken retaliatory action, extending the limitations. The illusion of normalization of relations between Russia and the West has definitively disappeared. Quotes of Russian shares dropped to the levels that started the rally in the second half of 2016, said the director of Analytical Department Hike Region Valery Weisberg. Why MTS was arrested reduces the attractiveness of ruble assets and the worsening of the corporate conflict between Rosneft and AFK System. The situation around AFK System certainly does not improve the investment climate in the Russian market. However, the impact of this history on the market was limited essentially by the dynamics of quotations of securities of the holding company and partially MTS, said the head of the investment department of Raiffeisen Capital Vladimir Vednev. The pessimistic mood of foreign investors contributes to the low efficiency of the agreement OPEC+ since global oil reserves are declining much slower than expected. As OPEC+ gave minus, the price of Brent crude last week fell to $45 per barrel, the lowest level since 14 November last year. Even with the subsequent recovery, increase of 6%, at the end of Friday's trading price has stayed around $47.4 per barrel, which is 11% below the levels preceding the May OPEC's decision on prolongation of the agreement on the limitation of oil production, see Kommersant on 26 May. Oil prices decreased significantly on the background of the frustration associated with the increase in U.S. production and a lack of progress in the reduction of oil reserves in OECD countries, is not conducive to investment in Russian shares, said Vladimir Vednev. In such circumstances, market participants do not rule out the further sale of ruble-denominated assets, although in smaller quantities. In July, the House of Representatives of the U.S. Congress could begin a discussion of the sanctions bill. Therefore, recovery of interest to the Russian securities by non-residents cannot wait, says Valery Weisberg. On the other hand, in his opinion, a large-scale outflow of funds observed in recent months, leaving the market persistent investors to trigger a flight which can only be a specific decision on strengthening sanctions. According to the analyst of Alpha Capital Andrew Schenk, in the medium term, interest in ruble assets may grow because of their undervaluation. According to a survey of analysts conducted by Reuters at the end of 2017, the RTS index may return to the level of 1,150 points, which is 15% higher than the closing last Friday.